And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is gloomy. It is not June gloom, but we got some gloom outside and a little bit cooler start to the day. And so what are we going to cover today? Some crypto news and some Bitcoin price action and some potential targets for the long term and for the short term. So let's jump right into it with the price action, because we have some pretty pertinent information as we did break the bottom side of the rising channel, which we have denoted that the measure move off of something like this is pretty significant, and it's probably not going to go, happen all in one straight shot, but this is a bear flag, and the technical target down there about 12,000 bucks. So is that going to happen all in one shot? No, I do think we will probably get a bounce off of this region and probably off of this region as well. And kind of, the market likes to trap everybody they can, trap the bears, trap the bulls, and then wash everybody out when when everybody least expects it. First thing I am going to notice here is the NASDAQ getting absolutely, slaughtered here today, down 2.2%, S&P down 1.6%, and the Dow off in the red. So all playing in concert with each other. And let's just take a look at the NASDAQ from the high. And keep in mind, we've been calling for a pretty big correction in the stock market and talking about selling the lower high here. We're only down 17% from the all-time high on the NASDAQ. For the S&P, we're only down 10%. And for the Dow is only down 7% from the high. So that being said, I think there is quite a bit more downside if this is going to turn out to be a bear market. Something I am noticing here, though, is this is technically going to be a higher high on the 2-day time frame and on the daily time frame as well. So we did put in a higher high. If we do get a higher low, it'd be a bit of a trend reversal on the daily time frame. And some might even call that a higher high on the weekly time frame. So that is kind of a point for the bulls. However, are we getting stopped out right at the 618? That is where the classic bull traps come in. And I do believe there's a lot of that kind of FOMO going on. The Fed had a meeting last week where they were a little bit more on the dovish side, but I think it was a bit misleading as of, something called the Taylor rule, which is one of the Fed's rules that says if you want to control inflation, interest rates have to go above inflation, which is at 8.5% right now. So I do believe coming into next month, they are going to go ahead with the continued rate hikes. I don't know if it'll be 75 basis points or 50 basis points coming into next month, but either way, increases in rates is typically going to be bad for stocks and good for the dollar. I'm just going to grab a sip of coffee here real quick. It is Monday morning, Monday, the new week of new opportunities. And so what else do we see? Stocks down. The dollar is rallying to the moon. And we did say that based off of the 3 drives of hidden bullish divergence on this guy right here. Let's see. 1, 2, 3 drives gets you a shot to the top side of the range. And we were calling that actually from this low right here, the bounce off the green 55. And I said, hey, look, if we clear 107, very likely we're going to head to the top side of the range, which is where we're at right now. And if this breaks on the daily time frame, the next target for the dollar, which is pretty much been very bullish for the last couple of months, the next target is going to be this guy right here. And here's what I would expect actually. So I'm going to just move that up to here. And the next target right here is we want to see actually a fourth drive of hidden bullish divergence, which would be mean the RSI probably gets kicked back here one more time. And the RSI comes down here and makes another slightly lower low. And that would be the liftoff point for the dollar to hit this target right here, 114. And so again, we're comparing lows. Hidden bullish divergence is when price is making higher lows, but the RSI is making lower lows. And again, I will just point this out to make it as clear as possible. And we want to see clear stop and reverse points. So here's a low. Here's a low. 1, 2, 3 drives gets you a shot to the top side of the range. The fourth drive typically gets you a shot to the 2618. And that's especially in cryptocurrency land. So I'm just going to go ahead and mark this area off here. So RSI actually has to get kicked back and come back below this level at some point. And that would give us the fourth drive. And that I think could be pretty significant. So short term up, and then, a bit of a correction, a little bit of a pullback. And then game on for the dollar, which would probably, if the dollar heads up here, very likely, I think some of those downside targets for Bitcoin start to get hit. And I don't want to say that it's going to happen all in one foul swoop. However, it could very well happen. So let me get to one of my cleaner charts for Bitcoin. I've had this. Actually, let's take a look at CMEs. What do I have drawn out here on the CMEs? I'm going to get rid of this tool right here. And we do have the daily volatility expanded above the 20 percentile. Stokes are down. And we do have the 4 drive philosophy here. In bearish, hidden bearish divergence is where price is making lower highs. The RSI is making higher highs. So here's where we would mark this off. So this is actually, I want to see the RSI first. So in correlation with this high. Yep. Right here. High. Okay. So this is really important, guys. I did a lot of research over the weekend and came up actually with a really good trading strategy. I hope to share with you guys soon. It just takes a lot of time to make these videos and make them all in concert. But basically, again, here we got, let's see here. Where's my drawing tool? In comparison to this high, right there, we got 1, 2, sorry, that one didn't count because RSI is actually lower than this high right here. So that was 1, 2, 3, 4. So what I found is this tends to happen when you get the 4 drives, especially 5 drives of hidden bearish divergence in the context of a downtrend. If we go from the low to the high, the first target is going to be right here at the 618, sorry, the 1618. Probably gets a bounce, short-term bounce there, and then ultimately that move is pointed down to 13,790. And if we look at the 2-day, The 2-day Stokes are just beginning to, and we only have 3 drives on the 2-day, but the 2-day Stokes are crossing down, and the average correction for a 2-day with the bearish divergence, 3 drives gets you a shot to the bottom side of the range, and 4 drives would give us that shot down here to 1370. We already got it on the daily. And since volatility is going to be expanding from the lowest level since this last 40% move, probably, let's see, from the low to the high, where did expansion start from there? Excuse me, 455% move. That was pretty big. This is the last time the BBWT, our volatility indicator, has been this low. And what I would expect is price to go in the direction of the trend. So 40% from here, let's see what that looks like. Yeah, I would say that that's all but initiated. If the dollar continues to rally, going into this Jackson Hole meeting on Friday, especially if Mr. Powell has a more hawkish tone on Friday, they say something like, oh, look at all these jobs we're creating. And look, the stock market just isn't even down that much. That's the only way people are going to stop spending, is if they feel the pain in the stock market, right? And I do believe on Friday, kind of the initiation of this move was off the news that we're officially in a housing market recession. So, yep, that threat of a move up to fill this gap looks like it's all been nullified. And how would I, take back these words in this bearish divergence call for at least a shot to the bottom side of the range? How would it get invalidated? And I would say this, could that be the line in the sand, this area right here? Let's see where the 618 is off of this low to the high on the 12-hour if we wanted to use that. Yeah, so if we start closing 12 hours back above 23,600, that would be the invalidation. Okay, bear trap in full force, and we're probably going to come up and fill this gap here. But as for now, as long as the 2-day Stokes are down, and 2-day Stokes will remain down as long as we're closing below 24,350. As long as the Stokes are down, I would expect that move to play out over some time. And this will close today. We could get a little backfill off of the closure today, maybe up to the 236 or even as high as the 382. However, with NASDAQ coming down, unless we have a miraculous recovery or a bounce off of this and to be fair, more often than not, this green 55 is a bit of a support channel. But again, this is looking really good for another leg down with the death cross looming in the background. That's when the 55 and the 200 exponential cross to the downside. When you see price action get sucked up into this area and then spit out, that is quite literally a perfect death cross. And in fact, you can see the last time on the 2-day time frame we had a golden cross. Wow, it was way back here in October of 2009. So the death cross looming in the background right there in front of all of our faces on the 2-day time frame. It's on the daily time frame. And here, here's a perfect version of the death cross, right? Are we getting it kind of in a repeat, right? Where price action gets sucked in there, sucks in the bulls, and then spits way out. Well, that could in fact be what's happening on the 2-day time frame. Let's see what we got on the 5-day. 5-day death cross is not even close, but this was our bias buster, was this guy right here, the 6-month bearish engulfing candle, indicating a market top in place. And we did say, hey, look, very likely we get a little bit of a backfill this month. So price action just kind of fills it up and, you know, splurts it on back down. And I would expect, you know, if we do come back down on NASDAQ to get a bounce off that 8,500 region. But literally by that time, people, you know, the market will be down from the high, down 47%. People will be literally in utter fear at that point. I think that might set it off. Anyways, again, dollar bullish, stocks down. So unless we get a massive recovery today, on the daily time frame, that is a bearish engulfing candle. Volume is, you know, so we could get a bounce right here. We got the silver cross going on there, so that is bullish on the daily time frame. And do we have any bearish divergence formulating right here from this point right here? You know, several drives. Several, is that even a word? Is that even a confirmed local high? I would say that is, as we did take out this low and put in a bit of a high right here, coming in the silver cross to the downside. And that is a golden cross. This is on the 12-hour time frame. So how many drives would that be coming from this point? Again, prices making lower highs, RSI is making higher highs. That is 1, call this 2, 3, 4, 5. And you might just call this a complex high. 5 drives gives you a shot to the bottom side of the range, and the range on the NASDAQ at this point would be something like this, between 13,600 and 11,300. And if this thing does come back down to the bottom side of the range, well, bet your lucky apples that Bitcoin does something similar and at least gets down to the bottom side of the range, which, you know, it hasn't really been ranging in spot price action, but I think it's a little more clearly defined on the CMEs here. And the range would be, you know, from this high right here to this low. And we're all but there. So, you know, first warning sign that, you know, maybe we get a little bounce first, right? Which is very typical on CMEs, would be some bullish divergence forming, which, what is hidden bullish divergence? So could we call it from this point? No. This would be one drive of hidden bullish divergence. If we do confirm this as a local low, what we would need is 3 drives to get us a shot to the top side of the range and 4 drives to get to the 2618. So very important week of price action. There's going to be a lot going on here. I'm going to cover a bit of news now. I don't know. Should we look at Ethereum? Ethereum's going to do whatever Bitcoin does. And another thing to note is September months for Bitcoin are historically down months, bad months for Bitcoin. You know, that doesn't really mean anything in the grand scheme of things, just because it's typically a red month in September. But I do think with all the underlying market conditions, right? Interest rate hikes, dollar going to the moon, stocks, you know, putting in that bearish engulfing candle on the 6-month time frame. I think that, you know, we're probably going to be in for a bit of, you know, the big move coming. And the other thing that tips us off is, again, volatility coming from a low level and beginning to expand. What does the 5-day say? 5 days coming down. If we do cross down here, you know, Ethereum's going to get hit a bit harder as it, you know, Bitcoin only rose 40% off the lows, and Ethereum rose 130% off the lows. So, you know, quite a bigger retracement. We don't have as many drives of, well, this is the 5-day time frame. And we did not take out that high. However, from here, so 1, 2, 3, 4, 5, that would be the 5th drive, and that could very well get us to the downside target. Wow, that would be pretty nasty for Ethereum, but let's just measure it out. On the 5-day time frame, again, from this point right here, this high, right, we've got actually only 3 drives of bearish divergence coming back from this point. So these were higher highs, right? But here's a higher high in price, lower high in RSI, higher high in price, lower high in RSI, and higher high in price. This is going to close in 1 day and 2 hours, looks like. Or sorry, 1 day and 9 hours. So if we do confirm this as a local high on Ethereum, closing anywhere below 1808, that is going to look good for a drive to the bottom side of the range, which is going to be at about 1085. If we get real volatile, $900. And in fact, it's only the 3rd drive, so I would expect a bounce again, a bounce off of this region at a minimum. You know, a pity bounce, and then another lower high in RSI, and then the next target down on Ethereum would be something like this. Let's go candle bodies. Wow, that could get really nasty. Next target down, yeah, is going to be coming in at 521 for Ethereum. That would be absolutely brutal. And this is a 5-day time frame, so don't expect it to happen overnight. These things happen over a few weeks, few months. Sometimes it happens a little bit slower. So the only thing in the, in the corner here is volatility is declining. So, and we will be crossing down here in the next 2 days. Momentum crosses to the downside. Any kind of a closure below 1659, which we're currently there by about $70. So there's another 2 days of price action. Who knows what kind of news is going to come out over the next day or two, but here is the news of the day. So we covered Bitcoin, we covered Ethereum, short-term, long-term targets. Short-term, let's see, short-term, are we going to get a bounce first before, look at all these lines here. Let me get on to something a little more feasible here. A little less clustered, as we could say here. So on the 4-hour time frame, is this a local high? Yes, it is. That is going to give us the same drives. I'm glad I'm noticing this right here on stream. Would that be a local high? Technically, no. I don't think so. So we didn't close below this wick. We didn't close below that wick. And I would not call that a local high. That is more like a little stair step to the upside. This would be a local high. Why? We closed below. Well, really, here's where I would have declared it. A high is that first closure below the prior wick. But really, it's confirmed right there. So that is a local high. And you'll notice, again, hidden bearish divergence. What is that? When price is making higher highs and RSI is making lower highs. So what lower highs am I talking about on RSI? Coming back from this point right here, we've got 1, 2. Is this a local high right here? It's hard to say. It's hard to say. You possibly could call this a high. I don't want to call it a high. So let's be conservative. Better to be conservative 1, 2, 3. So I am looking for the fourth drive to happen. The fourth drive is usually what gets it. And that means on the 5-day time frame for Bitcoin, we probably come back down here again, make another lower high. Again, this first time hitting this guy is typically a sell off the yellow 21. First, after being away from it for some time, typically that's a sell. And we get the fourth drive. These things will cross down in the 5-day time frame. I mean, that's going to be pretty significant if this thing does cross down and volatility begins to expand. And it will cross down in 1 day and 9 hours, crossing down below 21,000. So let's look at some of the lower term time frames. That's what I was looking at anyways. Volatility is extremely low right here. If we do confirm this as a local low, again, the 4-drive philosophy I want to keep in mind here. So what do we have here? 1, 2. This will close in about 1 minute and confirm, I believe, some upside action, at least to the 21. Short-term target at 21,615. Bitcoin kind of doing the opposite of what everybody thought in the market today. So that's typical. And however, Stokes are going to cross down. If volatility begins to expand, which how would volatility begin to expand and we start to see some divergences play out? So I just want to get back here on the 4-hour time frame and really nail this down for you guys because, okay, this is a local low. I was looking at this over the weekend, trying to get a bias on. This is going to be a pretty big move here. And I'm just going to use a horizontal for that. And then I'm going to mark off the horizontal in correlation with this. Actually, I'm going to use the horizontal ray, which is right here. And how many clear, stop, and reverse points on the 4-hour time frame do you see here, right? Clear, stop, and reverse points. Let's be conservative here. So there's 1, 2, 3, and really what I would say on this low here is this is could be a complex low. And if we do close above 21,751, I would be looking for a full-on shot up to that region right here. I mean, that could give us this shot back up to 23,000 on a wick. And again, we got the death cross looming. So 3, I'm just trying to see if if we got any divergence coming from these 2 points right here. No, from this point right here. Let's move it back to here. I'm getting a little lengthy here on this video. Sorry, guys. But being able to identify bullish and bearish divergence is probably the #1 trading skill in the market, in my opinion. And if you can do that, I think you can make a lot of money. But so coming from this point, what would we want to see? Hidden bullish divergence would be price making higher lows, RSI is making lower lows. So let's say we counted 1, 2, 3, shot to the top side of the range. However, what's the problem with this is that we only have 2 drives where RSI is making lower lows, price is making higher lows. 2 drives. So could this somehow be the 3rd drive? Am I missing it here? Am I missing it here? That is a lower low. You know what? we should maybe look at CMEs, but it looks like the 21's going to get hit. And essentially, for this to break here at 21,763, that would be your breakout zone for the 4-hour time frame. Stokes did just cross down on the 4-hour time frame. So what am I looking for as well on the other side is the 4 drives of hidden bearish divergence would be coming back from this point right here. So if we did it from this point right here, that would give us 1, 2, 3, 4, 5, 6. I mean, that might be good enough to get us that drive up there. And I would mediate that with a closure above here at 21,778 on the 4-hour time frame. Right now, because momentum is crossed to the downside and all the higher term time frames are going to rule the market. Let's see what the 1 hour is saying. 1 hour Stokes are up. And I'm going to get rid of this guy right here. And see if we have any of that hidden bullish divergence on the 1 hour time frame, shorter term time frame targets. So is this a low? Okay, let's call that a low. And yeah. So the 1 hour would corroborate this story here for the bounce on the 4-hour time frame. So what am I talking about here is you've got 3 low, 1, 2, is that a low? That'd be a high. No, I would not count that as a low. This, however, I would, just confirmed. So 1, 2, 3 drives gives you a shot to the top side of the range, which is going to be right around here. It could be even there in a weak bounce, but that would be right there. And then I'd be looking for one more low to get put in, higher low than this low. And that would do it for a shot up to the 2618, which is going to be all the way up there at 23,000. So are we in for a bit of a scam wick to the upside? I do believe in the short term, looks like we're going to get some bouncing up. And where does that line up on the daily time frame? That's also what I want to see here. Because I do think there's a good chance that we at least get the 9 exponential in for a bit of a rally right there, as we do have one drive of hidden bullish divergence where price is making a higher low and RSI is making a lower low. And that'll be coming from this point right here. As you can see, this is clearly a lower low in RSI. Now, if we did it from this point, that would give you 2 drives. But that doesn't look like a confirmed local low to me. So short term up. And I imagine any kind of a rally gets sold into. And as long as we are below that 618 right here at 23,000. Yeah, so that's where the bull trap's going to come in, right there at about 23,000 bucks. As long as we are below 23,147, pressure is on to the downside. And that's it for the crypto analysis for the day. Hope I didn't bore you to death, but it is Monday morning and I'm just getting my first cup of coffee in. And here's what I would say for the news of the day. Australia unveils plans for crypto regulations unlike anywhere else in the world, right? They're talking about Crypto regulations will be informed by a phase of comprehensive token mapping research, according to the Australia Treasurer. In a statement Monday, the Australian Treasury announced a multi-step plan to establish a crypto regulatory framework that it claims will be more thorough and better informed than those previously established anywhere else in the world. The key to the government's approach will be a form of market research it's calling token mapping. Token mapping will allow officials to view and evaluate trends in Australian crypto markets, to best identify how crypto assets and related services should be regulated. Today's statements from Jim Chalmers, the Treasurer of Australia, emphasize the importance of comprehensively understanding crypto markets before drafting regulations. In other words, they don't know jack about crypto and they're trying to figure it out. The previous government dabbed into crypto asset regulation, but prematurely jumped straight to options without first understanding what was being regulated. The Albanese government is taking a more serious approach to work out what is in the ecosystem and what risks need to be looked at first. Are we getting any clarity here? So basically, they're going to do more research and then they're going to make some regulations. Token mapping, finding, According to today's statement, the Albanese government token mapping project will identify notable gaps in the regulatory framework, progress, work on a licensing framework, review innovative organizational structures, look at custody obligations for third-party custodians of assets, of crypto assets, and provide additional consumer safeguards. So once again, a bunch of talking out the side of their neck, like most governments, telling you to go get, go do things that you don't need to be doing at the end of the day. So next up, another CBDC, central bank digital currency. Wonder why the government's doing that. So it's the WF. They're plotting against us. They're bringing out those CBDCs all over the world, tapping those, weak countries first where the citizens can't, like China, right? They have no right to say anything. The Chinese government says your currency is digital tomorrow and it's over. They get to track everything, and they already have the digital yuan. So the Bank of Thailand will launch a retail CBDC pilot test in a small group by the end of this year. And BOT states that the goals are as follows: to become a digital form of central bank money that is safe, reliable, and accessible by the public, to serve as an open digital payment infrastructure that supports inclusion and financial innovation in the digital era. The issuance of the retail CBDC could have possible ramifications on the broader economy, and financial system, from an extensive list of possible risks and challenges, blah, 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 blah. BOT identifies three primary concerns associated with a CBDC issuance: banking disintermediation, bank runs, and maintaining public trust risks that could directly impact the monetary and financial stability. So in other words, the government's saying, hey, look, if we announce a CBDC, are we going to get a run on the banks because everybody's going to take all their money and buy gold with it, right? Which, hey,